Good afternoon, everyone, and thanks for joining us for the Oracle Cloud Cash Management Elevate Your Treasury Department in the Cloud webinar. My name is Katie Bolt, and I'm the Business Development Associate here at Elire. Before we get started, I just want to cover a couple housekeeping items. Everyone has been placed on mute for the duration of the presentation. Please submit any questions you have in the Q&A or the chat to speaker portal at the bottom of your screen. A recording of today's presentation will be sent out in a couple of days, and also the recording from today, as well as all past Elire webinar recordings, are available on our Elire YouTube channel and elire.com. With that, I'm going to turn it over to our presenter, Chris Landiger, to kick it off.
Thank you, Katie, and good afternoon, everyone. Thank you for joining us. As Katie mentioned, our topic today for today's webinar will be Elevate Your Treasury Department into the Cloud, with a focus on Oracle Cloud Cash Management. As Katie said, my name is Chris Langer. I'm a SaaS Treasury consultant here at Elire. I've been within the practice for a handful of years now, implementing a number of different Treasury workstations that have spanned the likelihood of on-premise and cloud applications. So what today's agenda is going to look like is that we're going to do a brief introduction of who Elire is, talk about some of our experience and the practices we offer. Then we'll get right into the presentation regarding a banking cash management overview within Oracle Cloud, talk about the bank statement reporting process, how cloud handles the cash balances and treasury payments, going through bank reconciliation, and ultimately reviewing some of the delivered reports Oracle offers us. So for those of you who are joining us today that don't know who Elire is, we're a consulting firm where we specialize in providing strategic advice and guidance for best practice business process improvement, software investments. We're a trusted advisor to all of our clients and a thought leader in the industry, and we're recognized as one of Oracle's premier partners inside of their Cloud Excellence Implementer program. Within Elire, we do have a number of treasury-specific practices that span going from advisory services to implementation all the way through post-go live support in terms of managed services. So to get things started with banking cash management, we know that the day in the life of a treasury manager is very complex. You have a number of different items that you're in charge of as it comes to creating and setting up new bank accounts, performing cash positioning, forecasting, integrating various payments, whether that's funding or sweep accounts, doing bank reconciliation. All these things force us to have a more on-demand solution, which a cloud solution offers us. Cloud really allows us to get away from the days of VPNs and have our access to information right with us anywhere in the world, especially as we transition to this work from home environment that we've been living in for the last year. So how does Oracle kind of maintain this setup that allows us to really streamline these business processes? A lot of it starts with how bank accounts are set up inside of the application. Oracle follows a bank account module where it pulls together all the bank's branches and accounts into a single premise so that all of our information is kept and tracked in one place. We're able to grant access to all of our bank account information, whether it's to a specific business unit, different functions inside of the application. So if it's specific to AR or payables or payroll, we can grant specific unit or access to those business or bank accounts. We're even able to give user specific access to that. All that's contained in this singular bank account model that Oracle preaches. And it really helps us eliminate the redundant duplication of bank account setup. Whereas instead of having multiple bank accounts, the same bank account set up across various business units, again, through granting this access, we can have a single bank account set up for all business units. As it comes to this bank account model, we have a number of best practices we like to follow, as you know, this is really the key building block that cash management is built on. First thing is going to be assign a unique GL cash account to each bank account. This allows us to record all cash transactions to a specific account string. This helps reduce any complications as it comes down to reporting and the pre-built reports that Oracle offers us. Another one is defining all bank statement transaction codes that we get from a bank. This allows us to integrate and import in those bank statements more seamlessly and reduce the number of errors that we could encounter. And the last thing is going to be automating the reconciliation process as much as possible. This reduces the need for manual intervention. It ultimately takes time away from our Treasury department in performing more business critical tasks. And hopefully through this presentation and what we see by the end in the demo, this really shows you the capabilities that Oracle Cloud has in terms of automating that process for us. So as we said, this bank account model all focuses on the bank account setup. Within Oracle, we define our bank account and we link it to our specific banks and branches. We're then able to have the specific account use, as it calls out on this right-hand side, for what that bank account is used for. So we can have an account that's specific to payable, specific to receivable, so it's only available in that module, but it is still just a single setup that we use. On the bank account, we also define all the GL accounts that it could be using. So when we want to create cash accounting entries, we have the cash account string directly tied to that bank account for seamless creation. We can capture cash clearing account information, reconciliation difference account strings as well too. On the second tab, we control all of our cash management needs. So what I mean by that is anything relating to reconciliation and cash positioning and forecasting. Within cash reconciliation, we can set up any tolerances that this bank account can adhere to during that reconciliation process. We'll set up reconciliation rule sets, reconciliation start dates, data or bank exchange rate types, any parsing that needs to be done. We also look to define all of our creation rules. So really our first presentment item reconciliation rules. The bank account also contains the cash positioning. So if we have a target balance we need to hit, it gets defined here. And then the transactional calendar that is used for more of the cash balance and positioning reporting. Next, we said we can secure bank accounts by users and roles. So if we need specific access, data permission to this bank account, we can limit that by user or by role. And then lastly is our bank account or business unit access. So we're able to define this bank account for a specific business unit. If we need to have multiple, we can define multiple on this page here. What all this does is allows us to then get to a point where we can use the cash management module within Oracle. And so what does that look like? We have a functional area that splits into two main areas for cash management. Both of those areas are going to be our cash balance and position reporting. And then a second area or tile you can see there as well too, that is for bank statement reconciliation. So it really splits the two business processes into two easy to access areas. If we drill into our cash balances tile here inside of our cash management functional area, we can see a dedicated area that helps us maintain those balances that we import in from our bank statement. So this is a customizable page where you see on the left-hand side, we have filters that allow us to sort and display the data, create new inquiries on demand. It'll give us information as it relates to an overall cash balance, the total variance of all the accounts being listed, and any accounts that are missing statements. The second area we talked about was going to be the bank statement and reconciliation. So as we drill into this tile, this allows us to view all of any processing warnings or errors that could have happened during the import of our bank statements. So you have a seamless and easy way to address those errors directly inside of cash management. And then you also have a reconciliation portion of the page as well. So this will show you any incomplete bank statements that still need to be fully reconciled. You also have the ability to view your completed statements right here as well. Throughout most of these pages, you can create custom searches that are user specific. So if you or someone on your team is only looking at a handful of accounts, they can customize these dashboards to fit their needs. So as we think about the life cycle of a cash management process, all of it begins with bank statement reporting. Each day we get a bank statement in that needs to go through a number of processes in order for us to use and analyze the data. So Oracle connects directly with our bank in order to pull that information in via different transmission protocols. It can handle a handful of different bank statement layouts, but ultimately what it does is it connects to the bank, the statement comes into our network, and then gets applied to the various modules throughout Oracle's functionality. So really 4 steps take place in terms of bank statement reporting. First is going to be the receipt of that bank statement, the importation into Oracle or ERP, and it goes through a number of transformations right there alone. If we have parsing that needs to be done, the mapping of transaction types, all so that we can review the statement inside of the ERP. And once that's taken place, that bank statement is now eligible for bank reconciliation. So again, as we think about that bank statement process, it goes through those 3 phases of retrieve, load, and import. And then Oracle supports a handful of different statement file formats. So BAI2, the Swift MT940 layout, the Finsta layout, the handful of ISO layouts that are becoming more popular as well too. Oracle can adhere to all these various formats. As that bank statement gets imported, again, within our cash management module, we're able to view and manage that bank statement. There's a search page that'll show up. We drill into, again, that bank statements and reconciliation tile. We go into our task panel on the right-hand side, and we'll see a hyperlink to manage bank statements. This will allow us to search and handle and review all the data that is pulled in from for a specific bank account. So depending on the search criteria that you fill out, you can drill into individual bank statements. As you drill into those, you're able to see opening and closing balances, if it's an intraday statement, and ultimately each of the individual transactional lines. So, this one just shows a single example of just a check that has been cleared. But if you had ACH, all your various transactions that have occurred for the day will appear within this page. As we get through, as the statement has been introduced into Oracle and it goes through the data extraction, we are able to start producing cash balance reporting on it and issue treasury payments based on the analysis that goes into it. So as we think about the life cycle of all of this bank statement again, Oracle handles this through a number of processes. So the bank statement gets imported in. What happens is that not only does the import process runs, but it also runs a cash position data extraction and transfer, where it extracts all the information from those prior day intraday statements and moves into these handful of cubes that Oracle has at the database level. Ultimately, that all produces all the reporting that we need, the various dashboards within Oracle, any OTBI reports, any BI publisher reports, anything leveraging Oracle Smart View functionality for ad hoc analysis. Inside of the cash management module, we have our cash balances. So all that transactional data eventually ends up here, where various views can be built that you can look by bank, by account grouping, by currency to see your cash balance for that account. If you've entered a target and any variance off of that target that is occurring. You are also able to create payments right off of this. So if we need to fund any account based on the information we have displayed here, we're able to leverage, quick access buttons up at the top where you have transfer funds. This will help us create a funds transfer between two internal Oracle bank accounts. So if we're going from, in this example, Bank of America account 2869, or we'll go from our multi-currency account and then to our Bank of America account 2869, we can facilitate that type of transfer directly from our cash balances page. We fill in our from and to account, the transfer date, the total amount, any conversion that needs to take place, and then just define a handful of payment criteria, so our payment method, the business units tied to, in our payment process profile. And then we are able to pass this transaction through our payments module and have that integration be done with our other transactions that may be coming from other sub-modules like AP. Directly in cash management, what we're able to do is also create ad hoc payments. So this would be paying from an internal bank account to an external payee bank account. This could also require additional approval processing so that the payment can go through formatting validation before it gets transmitted. We're able to facilitate that, again, this ad hoc payment from one of our bank accounts to an external payee. So we capture the payee information and create a one-time payment on this. Again, similar setup to the transfer of funds, where we define all the relevant cash information. We can assign cash and offset accounting so that we can generate the accounting just directly based off of this, and then ultimately settle this payment through payments. As we start to think about the bank reconciliation process, within Oracle Cloud is quite robust. There are a number of different items that go into it. Here we can see an overall overview of that reconciliation process. So we know we have, everything starts with our bank statement. So what happens to that bank statement as it starts to come through the automatic reconciliation process is that we have parse rules that could be applied to it. We have transaction codes, transaction type mapping, that all relates to our various subsystems and subsources of transactions, whether it's payables transactions for ultimately trying to reconcile receivables, cash transactions, journal entries, the various sources that we want to facilitate this reconciliation of our bank statement against. We also have the configuration items, so any matching rules, tolerance rules, rule sets that get applied to our bank statement. All of this gets fed into our auto reconciliation process that then facilitates that reconciliation and will, ultimately, hopefully end in the complete reconciliation of a bank statement, but we may have exceptions that fall out of that. To cover the configuration that goes into it, we have a number of configuration items that need to be set up before we can facilitate an automatic reconciliation. This starts with our parse rules. The benefit of parse rules is that we're able to pull information from a bank transaction line and move it or parse it into a reconcilable field that can be leveraged during the auto recon process. An example of this would be for, let's say we have an AP payment that goes out of Oracle and the bank passes that transaction number back in the addenda field, but Oracle stores it on the system side as a reference number. We are able to then parse that number from the addenda field into the bank statement's equivalent of a reference field and facilitate that reconciliation based on that number. After a parse rule set, we tend to set up reconciliation tolerances. And Oracle has two sets of tolerances you can set up. First being a date tolerance, so most commonly used for the concept of checks, where you have a check issued on one day, but it doesn't clear the bank for a number of days later or weeks later. Date tolerances can be set up to cover that date range so that that check can be automatically reconciled back to the original issuing amount. The second type of reconciliation is going to be amount-based tolerances. This type of tolerance can be set up as a percentage or a fixed amount. So you can do a percentage of the amount and set it as a tolerance, or you can do, for example, a $5 amount tolerance as well. The key thing about amount tolerances is that it's only applicable to a one-to-one matching scenario. If you were to tie a tolerance to a bank matching rule that is from one to many or many to many, or any of the many situations, it's going to be ignored. So if you don't have a reconciliation tolerance defined, you need to have an exact match of that transaction, otherwise it will not be reconciled. This all comes together as we start discussing matching rules. Oracle supports a number of different matching rules for bank reconciliation. You can match according to one-to-one. So one bank statement line to one system side transaction, one to many. Again, one bank statement line to many system side transactions. So think of like an AP batch you may remit. Many to many bank statement lines to many system side transactions, or many to one, many bank statement lines to one system side transaction. So example of that would be multiple wires sent to one voucher that you captured in Oracle. Once you've decided the matching rule type that you'll be using, we'll then set up the actual rule itself. So the matching type is defined as one-to-one in this example. We can dictate which sources are then being used to facilitate this match. So Oracle supports the reconciliation of payables, receivables, payroll entries, external entries. So think about our manual cash management entries, or even journal sources. So we can facilitate reconciliation of a GL entry to a bank statement line. And then we define the matching criteria. So at a bare minimum, we'll have amount based, and we have amount and date. You can also have criteria around the reconciliation reference. So again, leveraging parse rules or specific transaction types. So there's mapping that can be done that can assign, a bank statement line as an ACH, so that it matches to the ACH that you've entered in payables. When we start introducing one to many or many to many, any of the many matching types, we also get the ability to start defining grouping attributes. So this is how we'll group the many of transactions together. So for this one to many example, we'll have a system grouping attribute where we can group by remittance batch number for our receivables rule. So this will group all those within the same batch number, and will facilitate the reconciliation on the amount on the bank statement line. All of this comes together into what Oracle defines as a matching rule set. Matching rule sets consist of the rules that have been defined and any tolerances. It's the linkage of the two. Within a rule set, you can prioritize rules. So best practice that we look to use when we're setting these up is that we'll go from more specific rules as a higher priority to more broader rules as a lower priority, so that we can ensure a higher hit rate of reconciled items. All of these rules, this rule set then gets defined onto our bank account. So you can see the linkage on the right-hand side of the screenshot as to what bank accounts this rule set is applied to. So rule sets are applied at a one-to-one level, so that you can have custom rule sets for specific bank accounts, depending on the nature of the transactions you're trying to reconcile. The last piece to facilitate the automatic reconciliation is this concept of bank statement transaction creation rules. What these are really used to reconcile are going to be the items on a bank statement that we have no system side record of. So if we like to think of these as first presentment items, so account analysis fees, bank charges, interest, ZBA transactions, pretty much anything that would come on a bank statement that we don't have a reconciling system side for. So we can set up these rules for specific scenarios. We define, line identification criteria, the transaction code that we want this applied to, that relates to the BAI code, MT940 code, the transaction type that it is. We're able to search inside of, certain fields to find a unique characteristic to then facilitate this match off of. So, a common thing is the addenda description. If you have, for example, like a ZBA, we could say, I want to look in the addenda additional information field, and I want to see transfer to account 1234. And anytime it finds that specific string, it'll automatically facilitate the reconciliation for us. What transaction creation rules can also do is generate the accounting for us. So we can define the cash account and the offset account that will then automatically create a subledger accounting entry for us. And these also are defined at a bank account level. So on each bank account setup, we can define which transaction creation rules get applied. All of this is to facilitate the auto recon process. And I know that was quite a bit of setup that went into it, but once that is done, the auto recon process should be, have a fairly high hit rate as it relates to reconciled items. This is a process that can be initialized manually on an ad hoc basis, depending on a team's want to reconcile, or it can be scheduled. You can have this set up to be scheduled every day at a specific time, or as soon as a bank statement has been imported. What this does is we'll look at the account setup and apply the rule sets, any parse rules, and any transaction creation rules that have been set up to facilitate that reconciliation. So through this screenshot, what it's going to show is that we have a transaction here on our bank statement side for $45,000, and on our system side for $45,000 as well too. So the thought would be, as auto reconciliation runs, these two would clear off for us. As part of their auto recon process, we can run our generate cash transactions. And so again, this is going to be a separate process that then applies the transaction creation rules for us to a bank statement. So again, based on that setup we had just done, it'll facilitate the reconciliation of that. So this will be showing that example where we only have bank statement lines and no system transaction to reconcile to. So we would be on the anticipation that our transaction creation rules will then reconcile these bank statement lines based on the criteria defined. So we run through the run control page in order to do that. So we define the bank account, the date that we'd want to reconcile from, and then facilitate that reconciliation for us. And we actually have a demo in order to show this as well too. So if I play this, what this is going to show is that we have a bank statement here for January 4th, where we have a number of bank statement lines and system side transactions that we would hope to reconcile. The end all be all goal of this is to have the complete left-hand side reconciled. And so there are also additional bank statement or the bank transaction creation rules defined to clear out the handful of other transactions. So what this is going to show is that on an on-demand basis, we're able to facilitate this reconciliation manually on our end. So we'll get out of this manual reconciliation page. We'll go into our task panel on the right-hand side, and we'll choose Submit Auto Reconciliation. From this page, we're going to define our bank account that we're wanting to reconcile. We can reconcile a specific statement ID, or we can choose a period of statements we want to reconcile. The next key thing I want to call out on this page is going to be our generate cash transactions. This is what's going to link the two processes together to facilitate that auto recon as well as that cash transactions reconciliation. So using those bank statement transaction creation rules. As we hit submit, we'll just come down to our process monitor and make sure that both of these processes have gone to succeeded. So we have our auto recon process first, and then because of that checkbox we had flagged, it will run our create bank statement transactions, and we'll clear off again those bank statement lines that do not have a matching system side line. So we go back into our manual reconciliation page. We'll define our specific bank account, that date again, so January 4th. We'll hit search. On our reconcile tab, we'll see that we have nothing showing up here, which is a good thing because then we move to our reconcile tab and everything that had previously been unreconciled has been moved over here. So the items that had a corresponding match have been grouped together, and then any item that did not have a matching system side had a corresponding transaction created for it through the facilitation of that transaction creation rule. So it would create it as that external transaction and then reconcile it for us. So we stop that. So the last thing I want to go over quickly is the number of predefined reports we have as it relates to cash management in Oracle Cloud. So Oracle Cash Management provides us a bank statement report, a cash and transfer report, and a cash to general ledger reconciliation report. All of these are predefined, delivered with your instance that you're able to process right away. On the bank statement report, the goal of it is to display all your bank account balances and transaction information. So think of this as a supplement to, instead of going into the manage bank statements page, you could just run a report that pulls all this information for you. It's to review activity for that specific bank account. So we would define that bank account. We can define a date range that we would want to view this for, and it will produce a report for us that lists out our account information, the period start and end date, the opening and closing balances, and then all the statement lines that adhere to the criteria we defined. The next report is going to be our cash in transit report. What this does is it shows us all of our, I'm sorry, let me just fix this quick. So the cash and transfer report lists out for our specific bank account all transactions that have been remitted to that bank but have not cleared. It's going to exclude all voided transactions and all reverse transactions before that date. So we'll select our specific bank account. We'll leave most likely a transaction source empty unless you want to see that specifically. And then we define an as of date. And what that's going to give us is a list of, again, all those items that have not been reconciled or cleared from our bank account. So you can get a list of outstanding items. Very useful if you're looking for a list of outstanding checks, as we know that this could take time to reconcile. And then the last report is going to be our cash to general ledger reconciliation report. What this ultimately does is compare the balances of our GL cash account to the bank account balance from our bank statement. And then it's also going to display all unreconciled journal entries for our GL cash account and unreconciled bank statement lines to help us see the discrepancies between those two balances. The cash to GL report lists the sub-ledger transactions that are counted in the GL but are not reconciled in the cash management. So something to be aware of as you're running this. And then again, going back to one of our best practices in assigning a unique GL cash account for each bank account so that this report can run effectively. You may run into issues if you don't have that one-to-one relationship and how the data gets pulled into this. So it's best to follow that best practice in order to assign that unique cash account to the bank account. So again, what we do is we just define the bank account to run this report on, and then we define the from and to accounting period. So if you want to look at just a single accounting period or multiple accounting period, the report can be processed for that. And what it's going to do is show you then the summary of what's on your bank and what's on your books balances, and then again, those transactions that make up the unreconciled amounts. So you can see a number of sources where if it's coming from your bank statement, you'll have a statement source, and similarly for your GL transactions. So that does it in terms of the functionality that cash management can offer us in Oracle. At this time, I can pass it back to Katie.
Thank you, Chris. Just for the sake of time, we will be following up with everyone individually in the Q&A. And just as I'm wrapping up here, feel free to submit any additional questions you guys do have, and we will follow up with you individually. And just a couple key things to touch on while we're wrapping up. Upcoming, we have the Elire Strategy Summit, which is going to be on March 24th and 25th. And this is focused on people, process, and technology with a variety of sessions over the 2 days. So feel free to visit elire.com for more information on that. And we also have 2 upcoming webinars in April. And you can also find more information on both of those on the website. And just as if you guys have any additional questions, again, there's Chris and I's emails. And then just please engage with Elire on social media. This is where we do post a lot of upcoming webinar information, future conference information, as well as new content. And we just want to thank you guys again for taking time to join us for the webinar today. A recording will be sent out in the next couple of days just for a reminder there, and we hope to speak to you soon. Thanks again.